Hello students, I am Dr. Manjunath V from Maharani's Commerce and Management College, Mysore. Today in this video, we discuss the solutions with respect to problem on issue of shares with pro-rata adjustment. First, let us concentrate on the illustration given. So here the illustration is given with respect to Raghavan Company Limited. Raghavan Company Limited was formed with an authorized capital of rupees 8 lakhs in shares of rupees 10 each. Here, authorized capital is given. Let me remind you all about the authorized capital. Authorized capital is the registered capital or a nominal capital registered with the company registrar. This is the maximum amount of capital a company is permitted to obtain from the general public. So here in this case, 8 lakh rupees is the amount of authorized capital divided into shares of rupees 10 each, which indicates the company has an authorized number of shares of 80,000 that can be obtained by 8 lakh divided by 10. 80,000 shares are available for company in order to issue shares. On 1/1/2019, 20,000 shares were issued as fully paid to the vendors for the purchase of machinery. Here, 20,000 shares were issued in consideration for the purchase of machinery to the vendors, and journal entry is to be recorded for this transaction. And also, company decided to issue 50,000 shares to general public at par value, which indicates the face value. The face value of the share is 10 rupees. The amount was payable as follows: rupees 3 on application stage, rupees 4 on allotment stage, rupees 2 on first call, and the balance in final call. Observe the various stages in which the amount is collected. 3 rupees on application, 4 on allotment, and 2 rupees on first call. The total of these three is equal to 9. The face value is 10 rupees. That's why the last stage of final call in which the balance of rupee 1 is to be collected. Applications were received for 75,000 shares. Please remember, 50,000 shares were offered to general public for subscription, but the number of applications received is 75,000. Here it is a case of over subscription when number of applications received is more than the availability of shares available in the company, then it is a situation of over subscription. Shares are allotted on pro rata was made to the applicants for 60,000 shares, which indicates the company accepted 60,000 shares, and the remaining applications were refused and the money was refunded. Totally 75,000 applications received for shares. Pro rata allotment of shares was made for 60,000 applicants, and the remaining applications were refused. A separate working note is required for these calculations. Excess money received on 10,000 shares was adjusted against the sum due on allotment. All the money was received except from Mr. Yogesh, who was allotted 300 shares, and Mr. John, holding 100 shares, failed to pay the two calls. When they say it's a two calls, we should recall the first call and as well as the second or final call. So 300 shares of Mr. Yogesh and 100 shares of Mr. John. Totally on 400 shares, two call money is not received. First call and the final call money is not received. The company forfeited these shares and again reissued as fully paid up at rupees 9 per share to Mr. Ravi. By analyzing all these transactions, now we need to pass journal entries. As I said in the previous video, first make note of all the important numbers in the given illustration in a separate worksheet. Later on, we can move on to pass journal entries. Number of applications received, number of applications accepted, now excess applications received, application stage per share value, allotment stage per share value, first call uh, per share value, number of forfeited shares. All these aspects is to be noted in a separate worksheet before moving on to pass journal entries. Now I hope all of you have taken note of these aspects and now we can pass journal entries. Before passing journal entries, there must be some working note because it is a kind of pro-rata allotment. We need to prepare some working note which may support to pass journal entries. Total number of applications received is 75,000 minus total number of applications accepted for allotment 60,000. Then the difference between these two is treated as total number of applications rejected. The number of applications received 75,000, applications accepted for allotment of shares is 60,000, totally 15,000 shares were rejected. This one working note is to be prepared. And one more working note is also required. The total number of applications accepted for allotment, as we know that it's 60,000. But company can allot only 50,000 shares because company offered 50,000 shares to general public. Only 50,000 can be distributed among the applicants. That's why out of total number of applications accepted for allotment of 60,000 minus total number of shares available for allotment of 50,000 is to be deducted. When we deduct this, we obtain a balance of 10,000, which indicates an excess applications accepted and to be adjusted. This excess 10,000 application money collected should be adjusted to next stage, and after application stage the next stage is allotment stage. So let us find out the ratio of pro rata allotment. Number of applications accepted is 60,000 and number of shares available for allotment is 50,000. So 60,000 is to 50,000. When we simplify it, then we obtain a ratio of 6 is to 5. What this 6 is to 5 indicates? This indicates those who applied for 6 shares, the company allotted 5 shares only. On the basis of this, those who applied for 60,000 shares, the company allotted 50,000 shares. This is what we call a pro rata allotment. Applicant may apply for more number of shares, but the company decided to allot a less number of shares. But still, the company will allot shares. Now, moving on to passing journal entries in the books of Raghavan Company Limited. First, a certain number of shares were issued to vendors for the purchase of machinery. for which an entry is to be recorded. On 1/1/2019, the company purchased a machinery and for which instead of payment of cash, company decided to issue fully paid shares for which an entry is to be recorded. At the time of purchase of machinery, the machinery comes into the business. Machinery is a real account. As per real account rule, debit what comes into the business. That's why machinery account is debited. The number of shares given to vendors is 20,000. It's a fully paid shares given. That's why 20,000 is multiplied with the face value of the share. 20,000 into 10 and the amount mentioned as 2 lakh. So 2 lakh worth of machinery purchased. Purchased from whom? Purchased from vendors. First, it is purchased on credit basis and later, instead of cash, the company decided to issue shares. That's why whenever an asset is purchased on credit basis, the vendor's name is to be recorded. Since vendor name is not given in this illustration, we recorded it as to vendor's account only. So 2 lakh worth of machinery purchased from vendor. Vendor account is credited. Machinery account debited to vendor's account. 2 lakh amount is recorded being machinery purchased on credit basis. The narration is to be recorded for first entry. The second entry is compensation given for vendors for the purchase of machinery. Vendor's account is debited with 2 lakhs rupees. 2. Share capital account. Shares given to vendors. Vendors the receiver. Vendors account is debited. Debit the receiver is the rule for personal account. Vendor account is a type of personal account. That's why vendor account is debited with rupees 2 lakh and shares is issued. Whenever shares is issued, it is to be accounted for capital account. That's why to share capital account credit entry is recorded with an amount of rupees 2 lakh being fully paid shares issued to the vendors for purchase of machinery. This is the first part of the illustration. The second part of the illustration where 50,000 shares were issued to general public. Now we will consider the various stages of issue of shares, that is application stage, allotment stage, first call stage and final call stage. The third entry is about application stage. Whenever application money is collected, bank account is debited. Here, bank account is to be debited with 75,000 into 3. Here, 75,000 is the number of applications received. 3 rupees per share is the amount meant for application stage. Therefore, 2,25,000 is debited for bank account. The amount is collected towards application stage. That's why to share application account is mentioned and amount is shown in the credit balance. To share application account 2,25,000 being application money received at rupees 3 per share. Whatever the amount collected towards application stage, the amount is to be transferred to share capital. But here in this case, it's a oversubscription case. Please remember the working note while passing the entry. Share application account here debited worth 2,25,000. But the full 2,25,000 now we cannot transfer to share capital because 75,000 shares are not offered to the general public. The company offered only 50,000 shares. In order to allot 50,000 shares, company accepted only 60,000 applications. That's why a certain working note calculations is to be accommodated while passing this entry. To share capital account is to be credited. It is to be credited with 50,000 into 3 as 1,50,000. 50,000 is nothing but the number of shares available or number of shares offered to the general public. 3 rupees is per share value which is meant for application stage. So only on 50,000 at rupees 3 we can transfer the amount to share capital account. That is 1,50,000 to bank account. Why here we mentioned it as to bank account? Because 75,000 applications were received, 60,000 applications for shares have been accepted, and 15,000 applications were rejected. If applications were rejected, then the company has to refund the application money. In order to refund the application money, the company will issue check to those applicants to whom shares have not been allotted. That's why to bank account amount will be refunded out of bank. That's why to bank account is recorded. 15,000 applications were rejected. Application money of rupees 3 per share is to be taken into account. 15,000 into 3, which amounts to rupees 45,000, is the total amount refunded to applicants to whom shares have not been allotted. To share allotment account, one more credit entry is to be recorded. To share allotment account is credited with 10,000 into 3, which amounts to rupees 30,000. This 10,000 rupees is derived from the second working note, where we mentioned number of applications accepted for shares is 60,000, availability of shares for allotment is 50,000, and excess applications accepted is 10,000. This excess application money, instead of refunding, we are just adjusting the application money to next stage is what we call as allotment stage. So that's why excess money of rupees 10,000, 10,000 shares, excess amount of 10,000 applications at rupees 3, which amounts to 30,000, is adjusted towards allotment stage, being application money transferred to share capital account and excess money refunded and adjusted. This entry is very important whenever a pro rata allotment of shares is made. Out of total application money received, a certain part of application money should be transferred to capital account. While transferring the amount to capital account, consider only the number of shares offered to general public and to be multiplied with application stage per share value. When we write to bank account, it's the refund of amount. Whatever the number of applications rejected, it is to be taken into account and multiplied with per share value of application stage. Allotment account is also to be created if excess applications is accepted, and it is to be multiplied with per share value of application stage. Moving on to next journal entry. The next journal entry is the due entry for allotment stage. For passing and due entry, first share allotment account is to be debited. Number of shares available is only 50,000. and at the stage of application per share value is rupees 4. So 50,000 into 4, 2 lakhs rupees is debited for share allotment account. To share capital account, allotment money is due towards capital account. That's why to share capital account is credited with rupees 2 lakh. Being allotment money due is the narration to be recorded. Next, collection of allotment money. Bank account is debited with 1 lakh 70,000. See, one more calculation is given. 2 lakh is the total amount of due. As previous year clearly indicates in the due entry, 2 lakhs is the amount due towards allotment stage. But we deducted minus 30,000. Why this minus 30,000 is indicated here? Because the excess application money collected is adjusted to allotment stage. In the fourth entry, we mentioned a credit entry of 2 share allotment account with an amount of rupees 30,000. So 30,000 is already adjusted to allotment stage as amount already received. That's why this 30,000 will not be collected again. So out of 2 lakh amount due towards allotment, this 30,000 is to be deducted, which is already collected and adjusted. The remainder amount 1 lakh 70,000 is collected and deposited into bank. That's why bank account is debited with 1 lakh 70,000 to share allotment account. To share allotment account, the amount is to be mentioned as 1 lakh 70,000. Now narration is being allotment money received. The next stage is first call stage. The due entry is to be recorded. Share first call account is debited. 50,000 number of shares into 2 rupees per share value. 1 lakh rupees debited. To share capital account, first call money due towards share capital account and the credit amount is 1 lakh. Being first call money due on 50,000 shares at rupees 2 per share. When first call money is collected, then bank account is to be debited. Here we should be very careful while passing the entry because there are two shareholders who failed to pay the two calls, which indicates they failed to pay the first call and as well as the final call money. Mr. Yogesh, to whom 300 shares were allotted, and Mr. John, to whom 100 shares were allotted, failed to pay the two calls, which indicates the first calls also. So 300 shares of Yogesh and 100 shares of John, totally on 400 shares, the first call money is not collected. Therefore, out of 50,000 shares, 400 is deducted. On remainder, 49,600 shares at rupees 2 per share amount is collected. That will come around 99,200. Then to share first call account, amount is collected towards first call. So credit entry is to be recorded to share first call account with an amount of 99,200 being first call money received on 49,600 shares. Now moving on to second call. Due entry first, share final call account is debited with 50,000 into 1 rupee. That is the balance amount which is receivable. Application stage, allotment stage, first call stage. If we add up a per share value, we will get 9 rupees. Face value is 10 rupees. The difference between 10 and 9 is 1 rupee, which is the balance amount to be collected in final call. That's why number of shares 50,000, on which per share balance amount to be collected is 1 rupee for final call. Now amount to be debited is 50,000. To share capital account 50,000, being second call money due on 50,000 shares at rupees 1 per share. Next, collection of final call money. Again, at the stage of final call money, on 400 shares, the amount is not collected. Again, Mr. Yogesh and Mr. John, the total holdings of these two parties is 400 shares, on which the amount is not collected. That's why out of 50,000, again 400 is to be deducted. The remainder 49,600 at rupees 1 is collected and deposited into bank. Bank account is debited with 49,600. To share final call account, the amount is collected towards final call. That's why a credit entry to be recorded with to share final call account with an amount of rupees 49,600, being second call money received on 49,600 shares. Now, directors forfeited the shares of Mr. Yogesh and as well as of Mr. John. So totally 400 shares were forfeited. At the time of forfeiture, it's a cancellation of shares and shareholdership. That's why share capital account is debited. 400 is the number of forfeited shares into 10 rupees is the face value of the share. Face value of the share is to be taken into account because it's a fully called up situation. Up to final call, the call has been made. That's why 10 rupees is taken into account. 400 into 10 amounts to rupees 4,000. To forfeited shares account, the amount already paid by Mr. Yogesh and Mr. John will not be refundable. Whatever the amount which is already paid by them, it will be kept in the name of forfeited shares account. So 400 shares forfeited, and on which both of them have paid application stage and allotment stage amount. The application stage and allotment stage, the total of these two will come around 7 rupees per share. 3 rupees of application stage and 4 rupees of allotment. The total 7 rupees is already paid by them. 400 into 7 amounts to rupees 2,800 credited with forfeited shares account. To share first call account. Both of them failed to pay the two calls. We should record it separately, for which to share first call account 400 into 2, which amounts to rupees 800. To share final call account on 400 shares at rupee 1 per share is not collected, which amounts to rupees 400. So here share capital account is debited, to forfeited shares account, to share first call account amount not collected, to share final call account 400 rupees not collected. So entry is properly to be recorded for forfeiture of shares. Being 400 shares were forfeited for the non-payment of final call money and first call money, which is not mentioned in the narration, but still you just note it down. 12. Entry number 12. Bank account is to be debited. This entry is to be recorded for reissue of forfeited shares. The forfeited shares were reissued to Mr. Ravi at rupees 9 per share. All the forfeited shares were reissued. That's why 300 shares of Yogesh and 100 shares of John, the totally 400 shares were reissued and 9 rupees per share amount is collected and deposited into bank. So amount debited is 3,600. The face value of the share is rupees 10, but at the time of reissue, amount collected is only 9 rupees per share. There is a loss of 1 rupee per share at the time of reissue of forfeited shares. This loss is to be adjusted by utilizing the amount available in forfeited shares account. Again, forfeited shares account is to be debited with 400 into 1 rupee of loss per share, which amounts to 400 to share capital account, that is 400 into 10 face value of the share amounts to rupees 4000, being forfeited shares were reissued at rupees 9 per share. Now moving on to last entry, that is final balance of forfeited shares account is to be transferred to capital reserve, for which entry to be recorded as forfeited shares account debited to capital reserve. Here forfeited shares account is debited worth 2400. How to arrive at 2400? Observe the previous two journal entries. In 11th journal entry number 11, we mentioned forfeited shares account has a credit balance of 2800. At the time of forfeiture, a credit entry is passed with 2800. In the previous entry, journal entry number 12, in which a loss of reissue of forfeited shares is adjusted with an amount of rupees 400. So forfeited shares account was debited with 400 in journal entry number 12. So the difference between 2800 of credit balance and 400 balance of debit with respect to forfeited shares account is taken into account for transferring the final balance of 2400 to capital reserve. This amount can also be obtained by preparing a separate ledger account with the name forfeited shares account and transferring the journal entries of forfeited shares. Being final balance in forfeited shares account is transferred to capital reserve. I hope you have given a proper attention for the solution in this video. If you find any difficulty, again watch the video and try to understand it, and based on the today's video and the problem and solution, I have given an assignment problem, and please solve this assignment problem and check your progress with respect to problem on issue of shares with pro-rata adjustment. I hope all of you have watched this video and learnt about the solutions on problems on issue of shares. Thanks for watching this video. I will meet you in the next video. Thank you.